Hello, hello, hello. Mic test, mic test. Hello, 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 hello. Looks like the audio is working. So, hello guys, and welcome to the 127th edition of the Trading Opportunities webinar. This is Nirav, and before we start with the actual webinar content, let me give you a very, very quick introduction about this series of webinars as well as about me, your host. So, guys, as I just mentioned, my name is Nirav. I'm the admin and owner of 50 Eyes. .com website as well as the 50 Eyes Market Analysis YouTube channel. We are currently going live both on this channel as well as the LinkedIn page, right? And what is this? This is the series of weekly webinar series which we conduct every Friday called Trading Opportunities. So far, we have conducted 126 of these and captured a total of 318 trades in these 126 webinars, including the three setups which were discussed in our last webinar, the 126th. We will have a look at all those discussions as we go along with this webinar as well. Apart from this webinar, let me give you a very quick rundown about some of the other of my work which is available for public viewing. I'm also the author of the book Think with the Markets. You can check it out on Amazon's Kindle electronic platform. As well as if you are not very familiar with Elliott Wave, I highly advise you to have a look at the course, The Complete Guide to Professional Trading with Elliott Wave, which is available by, you can check the details via this link on my website, Elliott Wave course. It has about 1600 plus students. And those of you who are not fully committed and are just looking to have a quick little understanding of Elliott Wave so as to be able to get by in this webinar, a free 14 video series is available from this course itself, and the link for that is available in the YouTube video description section, as well as it will also flash at the bottom of the screen in a few moments. That being said, last and most important thing is I've been keeping a track record of all my work since I started doing these videos and webinars on YouTube since 2016. You can see our accuracy has remained higher than 80% plus for 6 consecutive years, going as high as 90. And you can check the same here by visiting this link on the website. After which we started doing weekly webinar series instead of monthly. And for that, you already know that we have captured 318 trades in our last 126 webinars. So that's about it for our very quick introduction. And yeah, last thing, we do have a private Slack group where I post my live market analysis, trades, etc., etc. Those interested can fill the inquiry form by visiting this link and selecting subject matter as details for private group. That's about it for our introduction. With that, now let's head over to our actual webinar. And the way we proceed is just like every other webinar. We will, one second, one moment here. Yes. So as I was saying, the way we will proceed is just like every other webinar. We will first of all go over the chart of crude oil, sorry, Euro USD followed by crude oil, gold, S&P, as you can see over here in this list. Nifty, and eventually we'll discuss Bitcoin. These are the major markets which we discuss in every webinar. Let's now head over and start the actual discussion. So here on screen, we have the webinars recording, last webinars recording from 2nd of August. This is a chart of Euro USD right on screen, and we had taken a long position on this market. The idea is very simple. We are expecting a wave 3 up, and that was the main theme. Now let's look at what the current price information is suggesting. So here is the actual chart, and the analysis remains the same. Either we have the 2 complete here, or the wave 2 is still continuing sideways, like an ABC's flat kind of structure, perhaps. So if we go with this analogy, we will have the 1 here, A here, B here, and possible leg down for C here. So once this C leg is complete, we expect the market to then go on and take out this high of 1.10063. So my long position is still on, and technical stop loss will be below 1.06688. But I have an alert placed a little bit higher and do not want to be waiting for this long of a movement or this big of a stop loss. So nothing much to add here. Our expectation remains the same, and the trade setup is again nothing new. It's literally the same as we discussed in the last webinar. So that's about it for our quick look at Euro. Let's now head over to our chart on CL. Once again, guys, if you have any doubts or questions, you can just push them in the comment section. Let me just check if the free. This looks to be working. You can push that in the comment, and we'll have a quick look here. Gaurav has asked, analyze sale. Sorry, Gaurav, we are not really following sale. I don't really track it very regularly. So let's now head over to our next chart, the chart of CL. First of all, let's have a look at last webinar and see what were the counts and outlook. So here is the recording from our last webinar conducted on 2nd of August. And the analysis basically was that we are possibly seeing a triangle. And once the triangle's trend line, this white trend line was taken out, specifically this wave D low was taken out, then we will be looking for sell trades on this market. And this was the whole setup and the count. And eventually what happened is this low was taken out. So let's have a look at the live chart. Here is the live chart. As you can see here, this D low was taken out here. So that triggered my short entry, and I have now added that as a trade. However, the problem is that generally in these kind of setups, after the D low is taken out, we expect the market to follow through to the downside. In this particular case, the market has not really given a follow through. Instead, it is going up. So that makes this analysis a little bit what you would call less likely. It is possible we will have to redo the counts, and it is possible this is not a triangle altogether. To consider that or counter that scenario, my stops are currently placed around this level of 79. Right. So if the market takes this level out, I will already be out of the market in a loss. But so far, I'm holding the position because it is possible that this is becoming a more complex count, in which case this market can just propagate within this range for a while before taking out the low. So as I mentioned, I'm just holding the possibility until 79 for now. If it does something of this sort, we'll have to reanalyze the market and look for entry later on. And the triangle possibility is not holding very strong right now. So it's a wait and watch kind of market. If someone is not in the market currently, it's better to stay out right now and see. And as far as the short setup is considered, what we really want to see here is on the daily chart, we are currently looking for the market to again go back below the white trend line and take out the recent low, which is currently at 72.214 on this data feed. Right. So wait and watch for now. New entries look to enter only below or once this low is taken out. Otherwise, it's better to stay out of this market. So again, if you guys have any doubts or questions regarding this particular chart analysis, you can post that in the live chat. And what about the other guys? I can see a lot of people are online today. However, I'm not seeing much activity in the live chat. Sorry, Gaurav, as I just mentioned, that just won't be possible. It's not like I can open a chart and talk about it. I have to do a lot of analysis. It can take a lot of time, from a few minutes to an hour or maybe sometimes more. So I won't be looking at that. Well, that being said, let's now head over to our next chart, which will be the chart of gold. So let's first quickly check what was being discussed on this chart in our last webinar. So here is the recording from our last webinar conducted on 2nd of August. And let's see what was the play which was being discussed here. So the main theme in gold was that if the market, or we were expecting the market to hold the 2436 level, that was the main theme. If the market did hold the 2436 level, there was the possibility. Let me just switch this to 1080p so that we can see the things in more clarity. Yes. So coming back to the discussion. So in the last webinar, our main view was that the market should hold 2436. If the market holds it and sustains above it, then we expect the market to go much further up. However, what has happened is quite different from that, and we will have a look at it now. So here's the actual chart of gold, and as you can see, the market broke through to 436 and went much lower. So what is the outlook now? The main theme is that this is our point of reference, and from this point of reference we will start our counts. So our count at this point was expected to complete the correction here and the market takes off from here. That was the main count. However, the market has decided to remain within the range which is currently standing between 2277 to 2485. Now, within this range, since the market is propagating sideways, what we are expecting is that it is possible that this market is going to become a more complex kind of count, which basically means that further down move in this range is possible before taking out the upside high. That's what we call, let's say, the hypo 2. That further downside is possible before market takes out the high within this range of 2277 to 2485. Second possibility which I can think of is that this market possibly is giving us a triangle kind of count, in which case this will be the A wave, B followed by the other legs. In those terminologies of Elliott wave, a triangle is a 5-wave progression, which generally looks like this. And that's why I have drawn these trend lines here. So if that is the case, then again, there is no need to worry. We will have our alerts getting triggered to the upside, specifically once the market takes out this 2484 high, or let's say 2485, which is the topmost point of this sideways range. Then we can say that most likely the market has completed the corrective pattern and is now ready to take off and head further up, right? As long as the market remains below 2485, as I just mentioned, the second possibility is that it will just probably sustain within this range. It can form multiple patterns, and we are not really interested in discussing them in this public webinar, as that can take a lot of time. But these are the two main themes here, and nothing much to add here. I currently don't have a position on gold open, but I'm definitely keeping it in the watch list because I think it may sooner or later give us good trading opportunity here. That's about it for gold. And since I'm not seeing any participation, I'll just quickly move over to our next chart, which is the chart of S&P 500. And here is the recording from our webinar conducted on 22nd of August. And let's see what was being discussed. So the main theme was that we were expecting one more leg down to be seen in S&P's chart, which was projected with the minor up and then down. So basically, we were expecting a zigzag kind of formation. And the target to the downside was the range of 5305 to 5216. So basically, 5216 was the downside target. For further detailed discussion, you can just check the last webinar. But let's now head to the actual one. The time At the time of discussion, the market was at 5316, downside target 5216. So a proper 100 points move was possible. Now here is the actual chart, and now we can see that since 2nd of August, which was here, 5416 somewhere here, now market has gone lower and not only taken out the target level, which was at 5216. What am I even talking? One second, let me correct a few things here. First of all, 2nd of August is here. the market was here somewhere when we were discussing it last time. And this was the target 5216 to the downside somewhere here. So needless to say, it did smash the target and went lower with the good enough margin, I would say. So that was one of the main themes we had discussed. So it played out. It is one of the setups which were alongside Nifty and Bitcoin. And let's now look at the counts. Good morning to you, Luis. Let's see what the count is. So the count basically is that we are expecting a WXY kind of correction here from this point of reference, which is around the price level of, let me push it here, 5678. So from 5678, what we have is a count suggesting that this first leg down is a W followed by an X. And if this is the Y, then that will possibly be the end of the correction, could also be followed by another X and Y. So let me just firstly communicate what I'm really talking about in Elliott Wave terminologies. What we are looking at is a complex kind of count, double zigzag, let's say, which can also turn into a triple zigzag. So first 3 legs down is called W. Next 3 legs up is called an X. And the whole count can stop at the last 3 legs down, which is called an Y. Now, that is the main idea here. That is, we can say that maybe the Y is complete. However, I personally do not like this progression very much. It can be counted in impulsive ways as well. So for that reason alone, I am reserving the possibility that further downside may be possible. So what stands from here is two simple setups which are not very trader friendly right now. The one is that we want to see a market move above 5526. Only above that move can we say with some conviction that perhaps we have what you call a completion of the wave by here at the low. That is, the low is possibly in place above 5526. Second setup is very simple, that if this is the X, if this is the X, let me draw it properly on the rough right hand side. Then after this X, we will see another leg down, which we will call as Z. So if we see the Z, then obviously this low will be taken out, which is the current low of 5095. So basically below 5106, we expect that this market may give us a further downward movement. So based on that, the downward setup is below 5106. We look for possible sell setups. Above 5526, we will look for possible long setups. Wait and watch kind of market. Obviously, there will be some plays. For instance, there was a play here which we were able to capture. Let's have a very quick look at it. It was posted live in the Slack, where, let me just check that. Here is the S&P's chart. May remove the drawings here. Yes. So you were able to capture this whole move since August 7th. Here is the post. We were expecting one downward movement from 5261. The movement does happen. And then we expect further upward movement, which has already taken out the last high and hence completed the minimum requirement for a move. So this was all captured live in our Slack group. And again, those of you who are unaware, the details for Slack private group can be requested by visiting our website's contact us page and filling out the form with the subject matter as requesting details for Slack group. Right. With that being said, let's now, okay, we seem to be have a greater possibility. Let's see. S&P's 500 chart is what we're discussing. And here's a question from Jeffrey Pereira. Good morning. Good morning to you, Jeffrey. In your opinion, which hypothesis has a higher possibility? Okay. Since I do not have a position, I did not really give much thought to it as of yet. But looking at this chart, let me have a very quick take. I think the bearish possibility still cannot be avoided. That is what I can say with good certainty. As for the hypothesis, since the bearish possibility cannot be avoided, we have to remain cautious and we will have to consider the possibility of wave Y heading to the downside as a strong possibility, right? Now let me come to the reason of why I think that the reason is very specifically this leg. It looks very much like a wave 3. For instance, if we draw a rough outlook for a 5-wave progression in Elliott Wave, we already know that the third leg is the strongest wave, that is the fastest wave in the whole progression. So this is the third leg. It kind of resembles this leg. I know we have counted it as a Y, and that's how things are generally. Not all wave Ys are very clear. But as I just mentioned, since it kind of resembles the nature swift move, fast rate move, all red candles, as you can see, only one green candle is spotted here. Other than that, on this 4-hour chart, all candles are red. So because of this reason, I am assuming that more downside is definitely a possibility we cannot avoid. So stick with the two hypotheses. It's kind of a wait and watch market. I wouldn't play favorites just yet. But there is one thing I should do in light of this understanding. I should place an alert at 5186 so that I am better prepared and possibly can get a trade beforehand. So that's about it. Hopefully, I answered your question, Jeffrey, and you're very welcome, Jeffrey. With that being said, let's now head over to our last two charts of Nifty followed by BTC. And of course, guys, before I head over to these charts, at this point, I would like to request you guys, if you are live or watching this as a recording later on, do not forget to hit the like button. I can see more people in the audience who are currently live, but less number of likes on the actual YouTube video. And of course, even more important than these likes is that you kindly do share this content. We are seeing a lot of volatility with the number of views these videos get. For instance, some videos are crossing 800, 900, and some are not even crossing 500. As you can see, this last three webinars have not even crossed 700. So I do request that you kindly do your efforts and share this content with your friends, colleagues, or whoever in your closed circuits is into trading and investment. I'm 100% sure they will appreciate this. Right. So that's a very small and important request. With that being said, let's now head over to our next chart of Nifty and see what was being said in the last webinar and what really happened in the actual on the actual chart. So this is the recording from 2nd August webinar, which was again conducted live in front of you guys. And let's see what was being said in this webinar. Our take was very clear. We were expecting further downside on Nifty. I was very clear in my statement when I mentioned that I am sensing extreme weakness in this market. You can again check the whole commentary, which starts around 25, ends around 31. And this is the title 126th webinar. Right. Anyways, so what we were expecting was a possible movement. And let me see if we pointed out the actual target levels on this chart. Let me speed up this thing. This was around 24,450. Yes, 24,460 was the minimum support level which we were expecting on this counter of Nifty. Now let's look at the actual chart of Nifty and see how things have progressed. So first of all, here is 24,450 already taken out substantially. As a matter of fact, there is something I have to point here. This was our support. The market didn't even care for the support. It went straight below it with a gap, and then it didn't even, actually it is kind of filling the gap now. So but what my point is right now is that this market has shown absolute strong weakness, or what you call strong move by the bearish party or bears or bearish traders, whatever term you would like to use. So what's the count here? What's the take? What's the trade setup from here on? First of all, I would say that I have tried to count this thing. It has actually way too many possibilities to be able to discuss in this public webinar, and I'll just discuss the main theme. The main thing I feel is that either the market has established a low, which is at the price level of 23892 as its current low. For that, we do not have any confirmation whatsoever. The real confirmation will obviously come once this market reclaims this level of 24852. So only above this level can we say that this market has possibly established a support here. Other than that, this market does suggest something like this. A wave A down, seemingly complete. B up, possibly progressing, may have some more upside remaining, smaller upside maybe, perhaps. And once the B is complete, we will possibly see a break of the last low, and the market is going to take out this low. That is the main expectation right now. Again, as I said, we do not have any confirmation. I do have stock specific plays. There are some stock specific plays which have given us long trades specifically in the pharma sector. But then again, I do not discuss those things in these public free webinars. Although those are posted live in our private Slack group in our stocks section. But yes, getting back to our take, the setup here becomes for long. It's definitely no clear setup, just a wait and watch market. And for the shorts, I have an alert now placed here below 24966. So if the market goes below 24966, sorry, 23966, let's just type it. Then I will look to consider bearish possibilities on this counter in accordance with the possibly this count. Do keep in mind this is not the only count here. There are some other ways which are more complex, but as a matter of fact, doesn't really matter at this point. More or less, the story remains the same. Next thing I wanted to add is that we still have this support region. We can then extend it here, and now it should act as a resistance region. So the past support region, let me just draw the box here, can now act as a resistance zone. So basically our level of 24460 to 24586 can act as a resistance now. So that's why I have drawn this kind of a formation that the market can go and give a small leg up before going lower. So we'll wait and watch and see how this level behaves. Do we get the resistance within this zone, below this zone, or maybe a cross of the zone and then leg down, or if the market sustains above it, then possibly we can see a breakthrough to the upside. Completely wait and watch market, more of a stock specific play market. And I'm actually seeing some short setups on banking side. But then again, we don't discuss bank nifty here in the public webinars. Nothing much to add here, guys. If you have any doubts or questions on this chart, you can just push them in the live chat. Otherwise, we will head over now to our last chart of Bitcoin. And lastly, again, if you guys are enjoying the content, do not forget to hit the like button and make sure, even more importantly, to share this content with your friends or colleagues who are into trading. So here is the recording from our 2nd August webinar. And at this point, somewhere here, I guess we have discussed the chart of Bitcoin. Yes, these are the two possibilities which we discussed on the chart of Bitcoin in our 2nd August webinar. Let's see what those were and how this market has played out. So first of all, the main theme was that possible AF, B down, C up. We were expecting a zigzag kind of play, but the play was only going to get triggered above 69806. So this was the upside alert or trigger level. The second possibility was that this market is going to go lower, and this was just a corrective leg up, and this market has indeed gone lower. So, but the setup for this was not very strong. I mean, not very near our price. As you can see here, the setup for this was below 55490. We will look for shorting. So the market actually did play that out. And here is the live chart of Bitcoin on screen. 55496 was taken somewhere here. And the market not only did that, it went ahead and took support at our drawn support region at 51395, as you can see. Let's just call it 51,400. And not only that, if I zoom in, you can see that the market is literally respecting it. I have not changed the time frames to make it match. It just happens to be so that On this 4-hour time frame, the market has not even closed below this level. This is showing that our support region was held very nicely. And let's now look at the possibilities that come to light with all this being said and done. So the first possibility that comes to light is the possibility that this whole thing is complete here, that this was a corrective structure, which we can call as A, B, C, W, X, Y, whatever. We can call this as actually we can count it both ways. So for the sake of simplicity, I'm just going to call it as an A down, B up, C down correction complete. In which case this market can straight off head higher. There is no upside confirmation yet. And as you guys already know, the upside confirmation for this market is kind of far away from the current price. The current, what do you call, most immediate upside alert is at 69,000. So above 69,000, we can say that perhaps this market is going for more bullish place. Bearish setup are still persistently viable and visible here. It can more or less go into a sideways zone from here. And then once this sideways zone is broken, this market will take out the low and head lower again. So that view again still remains. So basically, we do not have any trade setup for long or shorts. It's a wait and watch market. Although our past bearish setup did play out after taking out 53, 400 or whatever that level was, 54, 400, whatever exactly it was. I'm not very happy about these kind of setups with these volatile markets and these big swings for only, what is this? Let me show you. We have a swing of about 17,000 points to catch what 2,000 points to 2,400. So let's just call 2,000 points. So not a very good setup, I would call, specifically given that this instrument attracts a lot of brokerage and other charges. So kind of stay away from this market, wait and watch. Long setups, as I mentioned, from swing perspective, will become active only above 69,000. Wait and watch with the bullish possibility above 69, bearish possibility below the last low. And other than that, we don't have much to add here. We do have some bearish targets at 44,260, but again, they are kind of irrelevant because the market has done the bare minimum and given us the least or the lowest possible target already achieved. With that being said, we have now concluded the discussion of BTC, which completes our all the charts which we discuss in these webinars. Those of you who were staying till the end, a very good audience for me. Thank you guys. And those of you who will watch this later as a recording, do not forget to do your part and share this content as I request to you guys in every other webinar. With that being said, I'll say goodbye to you guys for now and hopefully see you in the next one. Take care and bye.